Hello everyone, welcome back to Upside Down Data. Today I want to talk about Avalanche and what our risk indicator has been making of its recent price action, and also talk about a few things I'm going to be watching about the Avalanche ecosystem as it goes forward and how that might impact AVAX's price moving forward. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So for context, I want to talk about what our risk indicator, the upside downside potential indicator, has been making of AVAX's recent price action. So what I'm showing you here is the price history of AVAX over time, with each dot being a day and each day color coded based on the output of our risk indicator. So 5 is high risk, -5 is low risk. So what you can see is that throughout AVAX's history, the UDPI has done a good job of identifying these high-risk zones when these big moves to the upside have kind of petered out and where sideways consolidation or correction has followed, as well as these low-risk points, these bottom points that have preceded moves to the upside. And if we look at where AVAX is right now, we can see that we're moving off of these higher risk zones down into the lower risk zones. So I'm showing you here the long-term version of the UDPI. So this is a version of the model that cares about moves that play out over months to years. So these broader, bigger moves that play out for an asset. And so this is kind of saying that in the longer term, over the coming months, the UDPI is developing a more bullish bias. It thinks that the upside potential for AVAX in the coming months is greater than the downside potential, although certainly downside potential is possible. And what I want to show you next is to compare the different time frames. So as I mentioned, we have different versions of the UDPI. I was just showing you the long term. We also have a medium term version, which cares about moves that play out over weeks to months, so a bit shorter in its focus. So it cares a little bit more about some of the volatility that happens in between these big moves. And we also have the short-term UDPI that cares about moves that play out over days to weeks. So it's a lot more responsive to these kind of intra-week volatility, or a week that plays out just over a couple weeks. For example, you'll see it be a bit more responsive. And we can see this a bit clearly if we just look at the raw output of the model. So here's the long-term UDPI raw output. So this is just what the UDPI level has been throughout AVAX's history. This is the medium-term UDPI, and this is the short-term. And what you can see is that across the board, risk is falling on all the different time frames. So the long-term UDPI, it's fallen down below -1. The medium term, it's fallen down closer to -2. And the short term is actually all the way down below -3. And so the way I interpret this data is it's saying that in the long term, there's a bullish bias. I think there's more upside than downside potential in the coming months, but still it is possible for us to be able to see more downside before that ends up being realized. In the medium term, it's even more of a bullish bias. It thinks that there's more upside potential than downside in the kind of coming weeks to months. So it thinks that essentially it's just getting bullish in the more medium term. And the short term, that's when it actually is looking the most bullish. It thinks that in the short term, AVAX is looking quite oversold at the moment. Now, that's not a guarantee that price has to reverse off of where we are right now. Price could just continue consolidating. And technically, the model does think that there's a bit more downside potential that's realistic, so there's nothing to say we couldn't realize that. But essentially what the model thinks is that we've seen the worst of it so for now with this downtrend. So in this downtrend, especially coming off the all-time high, the model thinks, at least in the short term, we've seen the worst of the downtrend, and so we can probably expect consolidation from here, or potentially upside. The model would find it surprising for us to be able to dump super far down from here. Now again, that anything can happen in crypto. Really, with AVAX, its fate is kind of not its own right now. It's really depends what broader market conditions do. Does Bitcoin regain some strength? Is there more macro weakness in the stock market that tanks all markets, crypto and everything else? If that were to happen, then all bets are off, and I think AVAX would fall along with it. But what the model thinks is that everything it's seen about AVAX's price history right now, based on everything it knows about AVAX from the past, it thinks that we're likely near the bottom point in the short term, or at least there's not going to be another precipitous downtrend in its opinion. Now, again, you have to take that into context of the broader markets and the broader macro context, but overall, it thinks that we've probably seen the worst of this downtrend. That's the way I'm interpreting this. But again, not financial advice. You should make your own opinions. So that's what our model thinks about AVAX where it stands currently. And generally speaking, it has a bullish bias and expects some relief for AVAX. Even if that doesn't mean a big move to the upside, at least not continued downside, more than likely, it thinks. But I want to talk now about some things that I'm going to be watching moving forward to see how AVAX might perform over the next year. Some fundamental factors that I'm going to be taking into consideration. So the one thing I want to talk about is this report that Electric Capital had put out looking at developer growth in different ecosystems. So the people actually developing on these different layer 1 blockchains, which ones are growing the most in terms of the developers working on those chains, trying to build applications on top of their respective blockchains. So I grabbed this chart from that report. I'll leave a link to that report in the description if you want to go and check out the full report. But I wanted to just make note where Avalanche fell in the context of some other chains in terms of the amount of development that's happening on them. So the way that you can read this graph, what it's showing you here, is the total number of developers at the end of 2020 and comparing that to the total number of developers at the end of 2021, so end of last year. And so what these dotted lines are that you see here are different rates of growth. So this dotted line here is just the break even. So if anything that falls above this line means that it grew, anything that falls below means it actually shrank in terms of the number of active developers working on that protocol. And then this one is a 2 times increase in developer. So they 2x'd the number of developers working over that year. This line is 3x, this line is 4x. And what we can see is that Avalanche sits here at over 3 times growth from end of 2020 to end of 2021. So it's grown quite a lot, sitting up, almost at 300 developers, a little over 280 developers working on it. And I think it's just informative to look at this in the context of some other chains that are out there, because we can see it's growing at a similar rate to some other ones. So Algorand, for example, a little bit slower than Internet Computer or Terra or Phantom, but it has a lot more developers on it right now than something like Phantom does. And I think that's interesting, right? Because Avalanche, obviously there's a lot of different use cases for it. People are using it for a lot of things. One of the big use cases has been DeFi. I want to talk about that more in a minute. I think it's interesting to compare something like Phantom to Avalanche because they have been, in my mind, kind of competing for a similar niche in the DeFi market to some degree. They're both, affordable blockchains to use in terms of their transaction fees, have both been getting a lot of interest in the DeFi space. And so it'll be interesting to see how they kind of compete against each other. And certainly Avalanche right now has more developers working on it. So it'll be interesting to see in the next year if they can kind of keep that growth going, or if some of these more up-and-coming chains like Phantom might be able to push through it. Not to say that Avalanche isn't an up-and-coming chain, it absolutely is, but something like Phantom might even be more so. So it's something just to keep in mind. And what I would personally like to see is that over the next year, this rate of development growth continue or increase. And the reason I say that is that the more applications that exist on a blockchain, the more demand is likely to come to that blockchain, right? The more that people have a reason to use the given blockchain, the more reason they had to buy the token, the native token, to pay for their transactions, to use the chain. And so the more developers that are on a network can be seen as one kind of fundamental driver for adoption and then for eventually price action as a result of that adoption. Really, with the crypto market, with layer 1 protocols, in my opinion, one of the big drivers of price, of valuation, has been adoption, has been uses of the ecosystem. And so certainly this is something that you want to see, is a fast growing ecosystem with a lot of developers wanting to work on it, because that's going to drive future demand. If you see a drying up of developers and the developers shifting to other platforms, that would be a source of concern, because that means that now the interest is moving elsewhere and likely the money will move elsewhere as well. So this is just something that I'm going to be keeping an eye on, is how developers are approaching these different chains, which ones can attract more developers than the others, because ultimately those might be the ones that will do the best. Kind of even ignoring some things about what might have the best technology, objectively speaking, or something. Adoption means a lot. So that's something I'm going to be watching. So now, I should say, I'm not trying to make an argument here that this is saying that one chain is fundamentally better than another from a technological perspective or anything like that. But I think it is important to keep an eye on where the developers are going, because those chains are probably going to have an edge in terms of bringing in adoption and use. So let's talk about DeFi. So obviously this is not by any means the only use case for Avalanche or other layer 1s, but it's certainly a big one currently that people keep an eye on, and that it seems like the market has been really valuing protocols that have gotten a lot of DeFi adoption. And so we can see that Avalanche is currently sitting at number 5. So I pulled this data off of DeFi Llama. Avalanche is currently sitting at number 5, which is not bad, right? It's interesting, though, to see that Phantom has actually flipped Avalanche in terms of the total value locked on it. And then if we look at the market cap to total value locked ratio, which is one metric that some people will use to look at kind of fundamental undervaluation or overvaluation of a protocol. Some people argue that a market cap to TVL ratio that's lower suggests that asset's more undervalued relative to one that has a higher ratio. Now, I think that's a little bit dubious in some ways, just because obviously there are many more use cases for these chains than just DeFi. So I think of this as being the all-encompassing metric, I think is a little bit silly, but just something to keep an eye on, just another useful thing to pay attention to. And Phantom, you can see, is way lower. In fact, Phantom is lower than any of the other protocols on here in terms of that. So it's something to keep an eye on. And it might just suggest that Avalanche is less attractive from this perspective than something like Phantom being a potential competitor. But certainly, this is nothing to be especially concerned about right now, right? You know, Avalanche is ahead of Solana even in terms of the total value locked. And Solana being a chain that's gotten a lot of attention and people have really talked about as being one of the key kind of competitors to Ethereum. You know, this might be one argument to say that, you know, hold up a second, maybe there's some other players like Avalanche that also deserve a space in that conversation for sure. So something to watch, and I would like to see this start to increase, especially as market conditions start to hopefully rebound back to the upside. You know, look at this change here, the 1 month change for Phantom, over 100% increase in its total value locked, whereas Avalanche has actually lost during that time. I'd like to see this to change around. You know, it's possible that Phantom is kind of in its honeymoon period right now, then all the kind of tourist DeFi people who are just moving in for the high yields and new chains will move back out. I'd like to see some of that come back to Avalanche, though. Just it's something I'm going to keep an eye on over the coming months. And certainly Avalanche hasn't been helped right now with, you know, Time or, you know, Wonderland kind of imploding to some degree right now, you know, not doing well as being one of the bigger DeFi platforms that have been on Avalanche. Now, that's not me trying to FUD or anything like that, just an observation that that's been happening. And objectively speaking, it's not been great for anything associated with Wonderland. Now, obviously, DeFi on Avalanche is way bigger than that, so I don't expect that to be a huge problem long term. I think it should be robust. But I just want to see how that all plays out. And that might be one reason why we've seen this drawdown in total value locked, as some of that money has been pulled out, as that kind of whole platform has been kind of devolving over the last few weeks. So to keep an eye on. I would personally just like to see number of protocols increase and total value lock increase. If that happens, I have no reason not to expect Avalanche or AVAX price to be able to do quite well. That's just one of the metrics I like to keep an eye on. Another thing that we can look at, just carrying on from that discussion of developers. So I pulled this just off of the main AVAX website, just looking at the amount of adoption that's been going on their platform. And they have this nice little graph where they can visualize the number of new protocols that have been launching on the Avalanche ecosystem. And what you can see is kind of interesting, where you'll see these spikes when AVAX's price has spiked, and then kind of drawdowns. Now, that doesn't mean this is causal, right? You know, it's probably some kind of bidirectional thing, where as price goes up, more interest comes in, more people want to develop on that chain, and then that brings up the number. And so, but then also, the more protocols get developed, the more demand gets entered into the ecosystem, the higher it can go. So I'm not saying any kind of causal order here to say that if this goes up, price has to go up also, but it certainly couldn't hurt. So something I would like to see is more and more applications being launched on AVAX, because again, the bigger the ecosystem is and the more use cases it can have, the more demand should enter the space, and then the better AVAX, being kind of this underlying token driving the whole thing, should do, in my opinion. Again, that's just my perspective. Something to keep an eye on to see if this can start to move back up to the upside again, especially even during times when the price actions are relatively bearish. That would be quite a vote of confidence that people are choosing AVAX, even if there aren't just these kind of hype factors that are driving it up as well, potentially. Again, just my view of that. So those are some kind of more fundamental factors I'm going to be watching. And again, just anything that brings demand into the space should be good. And from my perspective, watching what developers are doing, watching DeFi adoption, and then just watching overall protocol launches are just a couple metrics that we can look at to get an idea about the health and growth of an ecosystem. And again, I don't see anything concerning right now, just to be clear. You know, I think Avalanche is doing just fine from these different metrics right now. All I'm saying is I'd like to see that continue, right? I think it's doing great so far, like to see that go on. That's just my perspective. So to wrap us up, I just want to talk about where the different UDPIs are for AVAX right now. And what we can see is that they're all in the negative, which is kind of remarkable because, as we had seen before, these had been quite high for AVAX for quite a while, as it had been kind of absurdly pumping over, pretty much ever since the summer. It had just been kind of going on a moon mission to some degree. Now we're starting to get a risk reset across the board for AVAX. And if broader market conditions can recover, this might be kind of that consolidation period, that point where AVAX is building up a base to be able to go back up in the future. So no guarantee that will happen. Again, I think it really depends on broader market conditions. But I personally see no reason why, if the crypto market gets more bullish, why AVAX shouldn't also go up with price, right? I don't expect why should AVAX be left behind if the rest of the market rallies? I think AVAX is in a fine position. I'm not really too concerned from that perspective. But again, not financial advice, just my opinion. So as I was mentioning, the long-term UDPI is negative 1.29, which means that in the coming kind of months to years, kind of the longer-term perspective, the model thinks that AVAX has more upside than downside potential in it. In the more medium term, again, it thinks that as well, but certainly in both of these cases, it thinks that there's a reasonable amount of realistic downside that could be realized, so you always have to keep that in mind. But then the short term, it's starting to think that this this move to the downside we had seen is starting to tap itself out. And you can actually see the risk bottoming out here as well, where it thinks that this move to the downside, it's realized a lot of the realistic downside potential. And it would be quite surprising from the model's perspective if it would nuke again, just go crazy to the downside again. Now again, it's crypto, anything can happen. But from the model's perspective, that would be surprising. It's expecting the downside to be largely exhausted, and then probably either just consolidation, maybe a little bit more move to the downside could happen, but nothing. It's not expecting anything as extreme as we've seen before. And then also moving back to the upside is totally plausible. And I would say, especially if market conditions get generally bullish or more bullish than they have been, given how horrible sentiment has been, if there's a renewed positive sentiment in the market, that could drive up prices across the board. And I would have no reason to expect AVAX not to also be able to realize some upside if that were to happen. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.